Meta stock still has a $29 billion revenue problem, and its VR goggle headset is declining in revenues and accelerating in losses year over year. But a lot of that is already priced in the stock, as the stock is soaring in the after hours after reporting Q4 earnings. What is going on, investors? Hopefully, you guys are doing well out there. A little bit of a change over the last, I think, 3 earnings reports, or maybe even 4 earnings reports that we've done with Meta. This stock is just kind of staircase down, finally bottoming at about $88 per share back in November. Now, it is rocketing. We're talking about to the tune of over 18% in the after hours, all the way up here to about $181 per share. That's after closing the day up $4.15, nearly 3% to $153 per share. Talk about this from a technical perspective, and if the worst is finally over with Meta shares. Now, look, the stock is still down over the last year, 51%. Over the last 6 months, it is still down 4%. But year to date, like a lot of stocks, has just been ripping higher. We've got, we'll just call that a $400 billion market cap on this one. As we roll through these financials, we'll keep that in mind. Revenue coming in at $32.17 billion. That was still a decline year over year of nearly 4.5%. But boy, those expectations have been reined in over at this company. And that's what happens a lot of times in the stock market. Expectations just get reined in. And then finally, you come close to expectations, and it's good enough for investors, more than good enough, again, as the stock is rocketing over 18% in the after hours. Now, not included in this press release was a we're talking about $40 billion buyback authorized by the company. That is roughly 10% of the outstanding float. That is a massive, we're talking about a massive buyback. The other thing that Meta gave you was guidance for their fiscal spend for the upcoming 2023. That also is moving in a positive direction. For the full year expenses for the upcoming 2023, they're expecting $89 to $95 billion. The prior outlook was $94 and $100 billion. And I have to go back and check other press releases, but I actually think it was even higher in previous quarters. So they continue to walk this back. They've executed on some layoffs, but they're also kind of streamlining operations, cutting cost, which obviously is a good thing and welcomed by shareholders. Obviously, capital expenditures also going to be walked back a little bit from $30 to $33 billion. That's the CapEx for 2023. Previous estimates given by the company was $34 to $37 billion. So significant changes across the board on the cost cutting. When we get over to the company's financials, you're going to see, yeah, this company actually does need to continue to cut costs. Now, that revenue came in at $32.17 billion. I tell you what, and you come over here to Google, that's probably giving it a boost as well. That stock up over 4% again, as this is pretty strong advertising numbers. This also was impacted by foreign currency exchange rates, I think by the tune of about $2 billion. So without that, or constant currency, you actually got a much larger increase on those revenues than most people were expecting. Now, the company, like I said, have been saying for a year here on the channel, they have a $29 billion program. The fact that they can't get over $29 billion outside of a fourth quarter. These are fourth quarter earnings. This is when online advertisers kind of do an online bazooka of advertising. They don't really care about conversions as much. So we'll see for subsequent quarters. Now, we did get Q1 guidance as well. Meta expecting $26 to $28.5 billion. The consensus estimate, as we see here, was for $27.25 billion. So on the low end, coming underneath it. On the high end, coming a little bit over expectations. And when you look at Wall Street, 33 analysts, the high end estimate was for $29.37 billion. So if they beat towards the high end estimate, well, I tell you what, they're coming right there. Now, they still haven't printed a quarter over $29 billion. That was after the iOS changes. I believe that was in April of more than 2 years ago. They still haven't proven that they're able to do that, but good enough for investors, because again, a lot of that stuff was priced into the stock. I remember doing this video a year ago when we had this massive gap down from over $300 per share down to about $240. And I said, I'm done, I'm out. And people flipped out, but turned out to be the right call. A lot of bad stuff was priced in the stock, and it is making a recovery. Now, what we have to wonder about with Meta for the upcoming quarters, can we reaccelerate to positive growth? Can we reaccelerate to over $29 billion worth of revenue in a quarter, and then up over $34 billion basically a year from now? We'll see what happens with Meta. Now, they did get a very favorable ruling, or not necessarily a favorable ruling. This was the right ruling by a judge out here in California. Meta Platforms was being sued by the FTC, blocking like a $400 million. I didn't say $400 billion. I said a $400 million acquisition of a VR app company. The FTC argued that if Meta is allowed to continue to acquire companies in the VR space, they would eventually develop a monopoly. The judge correctly ruled that you can't sue somebody and block somebody from eventually creating a monopoly. They have to have that monopolistic practice already. This was the proper ruling. If this did not go Meta's way, this would have had dramatic impacts on Lina Khan's ability to block mergers and acquisitions. I'm glad this one did not go through. Very favorable ruling again for Meta. But we're not getting a lot of positive data on those VR goggles, as PlayStation cut the output for its VR2 headset after weak pre-orders. This is a device that's actually a little bit cheaper than most of Meta devices, just $549. The estimate was for maybe 2 million units to be sold. Now it looks like roughly 1 million units. My guess is they're going to be sitting on some inventory there over at Sony and probably going to cut the price of those. Snapchat reported their earnings yesterday. Those shares plunged 13%, but we are seeing that basically that top of the funnel advertiser, which is like Snapchat, they're only acquiring kind of those major brands. They're pulling back on Snapchat. Maybe they're diverting that money over to a TikTok, but it doesn't look like at all they're really diverting that money away from Meta as they continue to bring in the revenue that Wall Street was expecting. Now, when you come over here to the financials, they're not good. But again, the fact that the stock is down over the last year 51% happens to price a lot of this stuff in. Your revenue year over year down on a quarterly basis, down or roughly flat on a year over year basis, but on a quarterly basis, you're down 4%. Now, your costs and expenses up 22%, both on a quarterly basis and essentially on a year over year basis. So you have flat to declining revenues and you have cost increasing. That means your income from operations fell off a cliff, down 49% year over year from $12.6 billion all the way down to $6.4 billion. Your operating margin shriveled up from 37% last year down to 20%. Your income taxes went down in lockstep to that, and your net income also shriveling up, down 55% from $10.3 billion all the way down to $4.6 billion. But I'll remind you, a lot of this bad news already priced into the stock. The time to go short this stock was when we did our video last year talking about the disaster about to come with Meta. That was the time to really turn negative on the stock when it started bottoming out here at these levels. That's actually when it started to get a little bit more interesting. Now, when you come over here to the revenue, again, $32.1 billion. That was the decline year over year. We talked about how our total costs and expenses went up from 21 up to about, we'll call that $26 billion. Your income from operations almost cut in half from 12.6 down to $6.4 billion. That's going to impact your diluted earnings per share. Not a lot to like from a financial perspective, but again, the stock is down big. Now, the company still has, we'll call that about $40 billion worth of cash. So they're essentially promising their positive cash in their balance sheet to an upcoming buyback. I tell you what, when you do a $40 billion buyback and you've got a $400 billion company, your stock, it's going to create some upward pressure on the stock. The company did borrow money over the last year. They had long-term debt. They took out pretty low interest rate, essentially bond on about $10 billion. Looks like they probably had to pay some fees. So they netted about $9.9 billion. They've got that sitting there. That bolstered up your cash position because figure this cash is down considerably. You were at over $47 billion worth of cash a year ago. Now you're sitting close to $40 billion and you didn't have $9 billion worth of debt over the last year. Come down here to cash flows. You pull down, again, like a 50% decline in net income from about 10.3 down to 4.7. But we get to add back in stock-based compensation, which accelerated over the last year. Anytime your stock goes like this, you're going to have to issue more of it in order to compensate the employees and the executives. That accelerated from 2.3 up to about $3 billion. They had these impairment charges for leases. I believe they abandoned some buildings and some leases, I believe in New York City for Meta. That was to the tune of $1.8 billion. They abandoned some data center assets as well. That was the tune of about $1.3 billion. So some of these things not related to the actual operation of the business. And so when you come down here to net cash provided by operating Facebook, Instagram, and WhatsApp primarily, it's not as bad as the net income operating profits show you. You went from 18 billion. Again, you're still down. You're declining across the board over at Meta. Still not this rosy situation, but it's not as bad a situation as it was a year ago. Certainly, you went from 18 billion down to 14.5 for the full year. We went from 57 down to 50. Essentially, what the company is promising is if we have kind of a flattish year next year, which look, when you look at the earnings estimates for Meta, maybe they tick up a little bit on the earnings side or the revenue side. The earnings will probably stay in a range because you are still accelerating your operating costs for 2023. Again, total operating cost between $89 and $95 billion. You come back up here and you see for the full year, the company did about $87 billion. So those are still going to increase. The cost next year, we're going to go up at least $2 billion, maybe as high as $7 or $8 billion on that cost side. And the revenues are probably only going to tick up fractionally. Some of it has to do with currency. So if currency is favorable, then it'll offset that a little bit. But for the most part, we're promising almost all of next year's cash flow or this upcoming years of cash flow to that buyback. Not that they'll buy back all 40 billion over the next year or so, but boy, that is just obviously a massive amount of money to commit to a buyback. You've got your purchase of property, plant, and equipment really accelerated over the last year from 5.4 billion all the way up to $9 billion. It was over $31 billion over the last year. So this $9 billion is actually an acceleration of that purchase of property, plant, and equipment. You went from 18 up to 31 over the last year. So that's where some of that cash flow is going. You come down here, you see in the most recent quarter, they repurchased about $6.8 billion worth of the common stock. That certainly probably contributed a little bit to the stock's performance just year to date, or certainly over the last couple of months. For the full year, they bought back about $28 billion worth of the shares. I would assume this buyback pace of, we'll call it 25 to maybe upwards of $30 billion over the next year, probably going to be in place. And that certainly will keep some kind of floor theoretically underneath the stock. Now, still have a problem with this company when you come down here to Reality Labs, which in my opinion, Mark Zuckerberg should be sending his own personal money on his own little VR goggles, which it appears nobody is buying. And people always chime in the comments and say, well, this, that, and the other. No, the numbers are not proving that this device is being used by virtually anyone. Look, over the last year on a quarterly basis, in terms of revenue, you went from $877 million. Again, $877 million is a lot of money, but not to a company worth $400 billion, not to a company that has $32 billion, not for a whole year, not for a lifetime, in quarterly revenue, okay? $877 million when you have $32 billion worth of revenue is basically a rounding error. And unfortunately, it went down. You went from 877 all the way down to $727 million worth of revenue. Again, this is supposedly the future of the company. You see, for the full year, paints an identical story. People talk about, they're launching the new headset. People are waiting for that. No, over the full year, it doesn't paint that picture. You went from $2.27 billion worth of revenue down to $2.16 billion. Mark Zuckerberg is wasting shareholder money on this stuff. If he did not start this Reality Labs business, this stock would have never taken this big of a decline. Would it have declined? Absolutely. Would have gotten all the way down to $89 per share? Absolutely not. Because you see here's your income from operations, or in this case, a loss off of $727 million worth of revenue for those stupid VR goggles. You earned in fact, you lost. You didn't earn. You lost $4.3 billion. That's $1 billion more than you did a year ago. So your revenues declined by basically $150 million, and your losses accelerated by essentially $1 billion from 3.3 up to nearly $4.3 billion. Paints the same story for the full year. You lost $10.2 billion this year all the way up to $13 billion. So I want you to take out a little eraser. If you have a pencil near you, take out a little eraser and just erase these losses and add these to the income from operations side. And yeah, this company would be worth a heck of a lot more today if he never spent the money on this stupid project. I think investors are going to continue to pressure Mark to cut the spending in those areas, and I think he is going to take it on the chin. He's not going to come out all at once and say, well, we're spending too much money here, I'm going to pull back. He's too prideful to do that. He's too confident in his own abilities, but over time, he's going to constantly be pulling back from the investment that they have into these reality labs, because other companies like Sony, which have far more content and far more ability and more customers that want this type of thing, they can't sell these VR goggles. Meta is certainly not going to be able to do that either. Now, from a technical perspective, it's been a thing of beauty, and it's been a thing of beauty since November. Now, I piled back into this one late. Now, I'm talking a bunch of trash on this company, and, you know, I'm going to probably sell my shares that I have. I think I had like 15 shares in my IRA account. I'm going to sell those tomorrow and make a healthy profit on them. I bought them back here somewhere on this black line. The peak over this black line was a signal that you had broken a key resistance area back here at about 125. Talked about on our Fang Stock recap show, there was resistance up here at 155, which is basically where the stock was earlier today. Doesn't surprise me at all when a stock right before earnings sets up right at a kind of key resistance / support level. And if you were to break like this stock does above it, it rallies hard. And it now basically rallied all. We didn't even have this line in here, but this is the next obvious area. 187 was support for a while after the first earnings drop. It was resistance if it broke through that. What is absolutely certain with Meta is these downtrend lines, boy, you can start wiping a lot of these away here. And the stock is absolutely forming we're talking a gigantically steep uptrend. Now, at some point, it will have these pullbacks. It will start to pull back, maybe as deep as kind of this gold line, if this is where the rally starts. You will, if, again, the stock holds these 180 levels, you will have created a very large gap between 150 and 180. When you create large gaps on the stock chart, they tend to want to be filled, but the interesting thing about Meta is we have a large gap all the way up here between 244 and 307. So there's certainly a possibility, if the momentum stays in this stock and in the market, that this gap up here, all the way up here, believe it or not, wants to fill sooner than the gap below it. I'll take my chances that the gap will fill down here below it. I'll take my profits at this level. But again, this show is, and this whole channel is not for me to tell you what to do. And I would encourage all of you out there, don't look for somebody to tell you how to buy and sell stocks. Look for people to generate ideas for you. Look for people to give you a perspective. Look for people that might have a counter argument to your perceived notion of maybe a general economy, the macro environment, or certainly single stocks like Meta, and then make your own decisions. This one has actually been very profitable for me over the last year or so, but I still have no interest in a long-term hold of a company that is burning over $13 billion per year on a business that has declining revenues. On top of that, the core business is not growing rapidly enough. That is why, if I wanted exposure to the online business, I have been piling my money into old Google. Hopefully, you guys enjoyed today's video. Back again tomorrow with lots more. Good luck with your investments.